Hello and welcome to your weekly Go No Go show here on YouTube at the Go No Go Charts channel. Thank you so much for tuning in. My name is Tyler Wood. I'm a CMT charter holder, and joining me as always is our chief of charts, Alex Cole. What's happening? Where's your beard, man?
Yeah, well, got to try to stay young looking.
Yeah, and the summer heat wave is on. I don't know if it's as sticky down by you as it is up here, but so are the markets. Everything's been heating up. S&P at all-time highs.
Yeah.
Let's dive into our cross-asset heat map and get a sense of the context for all of us traders and investors.
Yeah, this is one of those rare times where everything is in a go trend. So we've got strong go bars for the equity markets in the top panel, bond prices in a go, but weak go bars. Commodities has been struggling, chopping around back in a go trend. And the dollar, after a couple of days using UUP, of course, as the proxy ETF, back into a go trend as well.
Absolutely. Let's run through these global macro charts. Let's start with the 10-year Treasury yield, TNX, just to get a sense of that inverse price movement. Bond buying is weakening the situation for rates.
Yep. So potentially good things. Good things for dollar, right? We know that lower rates, declining rates, I should say, could be a good thing for equities. And we've seen that we've come out of the go trend, painted some no-go bars. Looking at the rates ticker itself, we are seeing an amber bar today. So rates rising today. We'll see whether or not we roll back into a no-go trend. And what will sort of tip us off to that, Tyler, is whether or not the zero line holds here as resistance. If the oscillator fails to get back into positive territory, we may well see price stay or revert to a no-go trend. Of course, if the oscillator gets into positive territory, then that's a bit of buying pressure on the price.
Absolutely. And as we love to do on this show, looking across multiple timeframes, let's see this on a weekly basis to give people a little more context for this higher for longer rate environment and what we've been chopping around with these last several weeks.
Yeah, we talk about it every week, higher, but not really increasing too quickly. That's what people don't like. We're still well below the prior highs. So are we still in a rising rate environment, or are we in a period of more stabilized rates? That's what people really sort of want to see in the equity markets. You can see we are above zero on the oscillator, looking for support, and the GoNoGo trend has come back to go bars, albeit weak ones, but very, very narrow range here that we're trading in at the moment.
And of course, it is Thursday morning, May 23rd. We'll see where this week ends up. For those of you that are new to GoNoGo charts, what's happening on a weekly bar is that that is calculating in real time as market activity takes shape. Once that week is closed, the bars are never repainted or changed after the fact, but that's a live and active bar on the far right side of the chart. Alex, let's move on from interest rates. Let's take a look at the US dollar. We use UUP, which is an ETF proxy for the dollar index. This is going to give us a sense of volume as well. In the GoNoGo oscillator, when that turns to the dark blue color, we're seeing high relative volume for the dollar index. Right now, we're in light volume, and we have just surpassed those prior highs, but pulling back in a retest right now.
Yeah, definitely higher highs though and higher lows. So go trend in place on the weekly chart for the dollar using the UUP ticker, of course. Weaker bars, as you said, oscillator falling towards the zero line, but we are just about above these prior highs. This should act as some support going forward. So if we take this to a daily chart, you can see that we found that support. It looks like we've had a little bit of a brief foray into painting different colors. And the oscillator, though, out of step with the go trend and is underneath the zero line, currently finding resistance at that level. So kind of an inflection point for this go trend to resume proper. We would want to see the oscillator back above zero.
Absolutely. Let's take a look at U.S. oil. Obviously, rising costs of fuel and those will impact our economic sensitivities. Right now, we're in a no-go trend on the daily basis.
Yeah, and you can see that momentum has just been turned away by the zero line. So that tells us momentum continues to stay on the side of this new no-go trend. So we saw that break below zero. We saw the no-go take hold. We've now seen signs of trend continuation as the oscillator gets turned away by the zero line back into negative territory. So after this go move, we're certainly still in, for the moment, a no-go trend.
And let's turn our eye to the shiny friend over in the precious metal space. Let's take a look at gold.
Gold's had a good few months, and we can see that we made a slightly higher high here over the last few days. This was earlier this week. We've fallen away quite quickly, so tested that resistance on an intraday basis. That kind of held up. Obviously we've got higher closes here, but that looks like it was fairly strong resistance. We've fallen away quickly. Now we turn our eye to this most important point here. What happens at the zero line as we fall down and test that level? Will we find support? If we do, we most likely will set a higher low, as we aren't yet near these levels from earlier in May.
Absolutely. So cross asset map, everything's in a go trend. Bond buying, commodities. We're looking at the US dollar index as well as the equity markets using the S&P 500 as our benchmark index. Let's run through the indices real quick. Obviously Dow topping up at 40,000 and pulling back. Why don't we pull up a chart of the Russell, IWM?
Yeah. So IWM, obviously smaller stocks. You can see that it's been moving sideways and has not taken off to the extent that the SPY has. The S&P 500, obviously at all-time highs. We didn't quite get there with the Russell. You can see that we just stopped short of where we were in March. So interesting moment. Will it play catch up with the rest of the equity markets, or are we going to watch the zero line to see if we find support here? If we do, great news. We probably will see some form of trend continuation then and an attack on these prior highs.
Absolutely. And now let's turn our eye to the S&P 500. SPY ETF ticker symbol for the S&P at all-time highs, right around 5,300. Alex, talk to us about this go trend and what it means to be at an overbought level, sustaining that higher momentum.
Yeah, I mean, certainly we've known plenty of people, Tyler, that look for periods of overbought because it reflects such enthusiasm. And we know that in periods of strong trend, we're going to see overbought levels continue and persist as the market moves higher. So we're going to watch to see if we do come back towards the zero line, do we find support? But very interesting as this played out. We saw the rollover into this correction that sort of took the form of a short no-go. Volatility shrunk, and then we broke out of it, and we've gone back into that go trend, as you said, at all-time highs. So we like to say it, we've said it before, don't let the top of the chart fool you into thinking it's resistance, right? There is plenty of space above this chart, right? Above the price where we are right now.
Absolutely. And last but not least, QQQ, the ticker symbol for the NASDAQ 100. This week, we've seen a rotation back into technology that we're going to talk about here in just a minute. Similar looking chart coming through that corrective period and really taking off. Same kind of strong momentum, but maintaining that overbought level.
Yeah, similar looking chart. Remember, don't forget some of the largest cap stocks in the S&P are those giant tech stocks. So not a surprise totally. But yeah, very strong go bars, oscillator well in positive territory, remaining overbought, as you said. So a lot of heavy buying in this move higher.
Absolutely. So our next step in the process of a top-down analytical approach, we have a sense of the asset classes, some of the headwinds and tailwinds. Let's get under the hood to this market of stocks rather than the stock market. Taking a look at the GoNoGo Sector RelMap. And relative strength is a very important part of our toolkit. When we're looking at a ratio chart, we're simply dividing one by the other. So for our 11 sector spider ETFs, relative to the benchmark index, this heat map is showing us the relative performance of each of the sectors against the benchmark. We can see that powerful rotation that's happened here in 2024 with outperformance from our cyclical sectors, things like energy, financials, industrials, materials, all leading in those blue and aqua bars through the spring. And we have seen yet another rotation. Those have rolled over into pink and purple no-go conditions on a relative basis. And what's important for all investors to keep in mind when we're looking at a relative strength ratio chart, that doesn't mean they're going down, but perhaps not going up as fast as the S&P benchmark. What is leading the benchmark higher is that top panel. XLK is our information technology sector, and that has been really in the doldrums of underperformance, one of the weakest sectors throughout this bull market period here in 2024. And that is back in a leadership group. And we're still seeing a little bit of outperformance from the utilities sector, that trend weakening to aqua bars. But Alex, for today's show, let's dig into the technology sector and figure out what industry groups are leading that sector higher.
Absolutely. It's just interesting to note, as you said, that the tech and utilities, right? We're at that balance tipping point.
Barbell.
Let's see which sectors come back in to join their teammate, if you want, offense versus defense. It'll be interesting.
Absolutely. Characteristically, things like consumer staples and utilities tend to show up in leadership positions in downtrends when markets are in no-go conditions. Here we are in a bull market. It's normal to see groups like technology leading, but not always a defensive and an offensive sector at the same time.
Yeah, so, and often you'd expect more than just tech. It'll be interesting to see what happens to communications and discretionary moments still entrenched in relative underperformance.
Absolutely. So let's use one more relative strength heat map. We'll look at the industry groups of the XLK relative to their sector. So in that top-down approach, we're narrowing in on the areas of the market that present the opportunities for us to go do some idea generation, looking for longs. And this heat map is telling us that there are a few industry groups of the technology sector that are indeed pushing this higher. That top panel is renewable energy equipment. Yes, renewable energy equipment is part of the information technology sector. We also have computer hardware and semiconductors leading this sector. And so from here, we can do some work in a lot of the different platforms where GoNoGo Charts is implemented for scanning and screening, looking through the lists of securities that comprise these industry groups. But Alex and I are going to go through a number of different names individually, and let's take a look under the hood at those industry groups and find the opportunities that are looking most attractive. So, Alex, why don't we start in the semiconductor space? A lot of attention being paid to NVIDIA. Let's look at a couple of different names this week. First ticker symbol is MRVL.
So Marvel Technology, another interesting company coming out of the semiconductor space, not yet at these prior highs. So it's going to be interesting to see if we can play catch up and join things like NVIDIA that have done so well to sort of lead the semiconductor subgroup, continue to lead it higher. And if we bounce this out to the weekly chart, you can see that on the longer time frame, we're getting some support. So we're going to be looking to see if we can continue this movement to break out of the GoNoGo squeeze. We've got strong blue bars on the longer time frame. Here's that prior high we've been talking about. We're going to try to see if we can get past those levels.
And we know with volatility compression, this can happen at times of trend continuation or trend reversal. And it all comes down to the direction of the break. So we've been in a go trend. We've formed that max squeeze. And so that means momentum came from overbought levels down to the zero line and became stuck. And there was that tug of war between buyers and sellers. The break is to the upside, which means buyers are back in control, and we're seeing that move higher out of that break. So Alex, let's turn our eye to the next one, Semtech, SMTC. And part of the GoNoGo show is this top-down approach, but also in terms of idea generation, we don't want to just look at what the headline companies are doing at a stock split for NVIDIA. We want to look at additional areas of those industry groups where perhaps they're going to play some catch up, or perhaps they are also trending opportunities for us to take part in.
Yep. And so when we're looking at now Semtech, you can see that we've been moving mostly sideways. We can see riding the zero line here. We were going to watch to see if we can get that bounce back into positive territory, and then perhaps that'll take us to new highs on Semtech.
Absolutely. Let's jump this one out to a weekly basis as well. Just to give a little more context, a lot of these companies have been in long-term downtrends. And the idea about trend following is that we're not trying to go bottom fishing. We don't want to get in too early, but we want to capture the meat of the move. So the bigger the base, the higher in space is how Alan Shaw and Louise Yamato used to say it. And that's exactly what we're looking at here, is long-term downtrends that have resolved and based out and now moving higher. Let's take a look at ONTO, ONTO, one more semiconductor.
Yeah, what a trend this has been on a weekly chart. This one not typical, as you said. A lot of them been moving down. ONTO has just been moving steadily higher, and then you can see on the daily chart we've surpassed all of these prior highs. We're painting strong blue bars, oscillators in positive territory, so confirming the trend that we're seeing in price. So a very good looking chart of ONTO, especially on the weekly as well.
Absolutely. Now let's switch back. I want to take a look at the ratio chart of our renewable energy equipment industry group relative to the sector XLK. And so when we're looking at these relative ratio charts, we obviously want to participate in absolute trends, right? We want the securities that are trending higher. We're also looking for that outperformance. And that simple ratio chart can give us a sense of how strong that outperformance is. We could do the same kind of trend analysis using the GoNoGo charts to give ourselves a picture of just how strong the relative outperformance of these sectors or industry groups are. So it's $ DWCREE against the XLK. And Alex, I gotta say, fast fingers today, my friend. Well done.
Yeah, so strong movements. I mean, you can really see how renewable energy is like shot higher on the daily chart relative to the XLK, broken out of a max squeeze. We've been moving sideways. We've been seeing signs of trend continuation, and then that bounce higher today. And if you look at it on the weekly chart as well, you can see how fresh this is. Underperformance in renewable energy, and now we've broken above the zero line. Remember, momentum analysis should give you a bit of a leading indication of what's going to happen. We see it break above the zero line before the trend change in the panel above, and then go trend, a little bit of uncertainty, and now the go trend again last week, and then this week, of course, really strong move. So fairly new relative go trend for renewable energy. So this could have some legs if you think about it.
And we know the psychology of markets. This kind of spike in relative outperformance, it's certainly capturing attention from many more investors. That's what gives fuel, volume, and asset flow to some of these moves as more and more investors are paying attention. So now, Alex, let's take a look at a few renewable energy equipment providers that sit in this industry group. First one is First Solar, FSLR is the ticker symbol.
Yep, FSLR, massive driver of that outperformance, obviously, with some strong bars this week. But you can see how the same sort of conditions take shape and apply to your analysis. We're looking at a renewable energy company here, but it's the same things we always talk about. Look at how we've broken out of that max go-no-go squeeze. Price was moving sideways, stayed in the go trend. Once it breaks, we see trend continuation. We saw another retest here, and now we're taking off higher on heavy volume. So very strong. Let's bounce this one out to a weekly, and you can see that again, even here, relatively new, but surpassing these prior highs. So this is a strong move for First Solar.
Absolutely, and we'll see by tomorrow afternoon how this week wraps up. Yeah. I think what the important lesson for trend followers is that securities, starting to move into go trend conditions. We never know what's going to happen on the right side of the chart, but our objective rules of putting us in the position to take advantage of things that are moving higher, when those accelerate, that's just to our advantage. And the same thing in reverse. If we are entering a no-go trend, part of our rule system is we don't know how far it might fall. We don't know what the market is seeing that is so suspicious. But being out of no-go trends avoids any of those accelerated downside losses. Let's pull up another one. TPIC is the ticker symbol.
So this is TPIC on a weekly chart. And I remember when we talked about this earlier, I got excited, right? Because it's the first go bar on a weekly chart. That's exciting. Always the beginning of something new. You can see that it comes after we break out of this max extended go-no-go squeeze into positive territory. The whole picture starts to take shape. You can tell the story. We've come off this ultimate low. We've made a slightly lower low here. We're basing, and then we move into that new go trend on the weekly chart. So if we then drill down to the daily, you can see that's really started to move quite quickly. And we've had a retest and we've got trend continuation as we move higher.
And with multiple time frame analysis, we're going to see trend conditions take shape on our shorter time frames first, but getting that confirmation on the weekly basis that we're breaking out of that max squeeze, that we're moving higher and entering a go trend on the longer time frame as well, gives credence to taking the entry positions on the shorter time frame.
Yeah, and Tyler, can I take a minute just to talk about sort of risk management?
Please, we can take the rest of the hour. The most important.
We talk about multi-time frames a lot, but this just jumps out at me as an example that may be worth sharing. When we looked at this chart on the weekly, we know we've been in a downtrend here, right? This whole time of 2023 into 2024. So when we look at it on the daily and we see choppiness, we got to remind ourselves that given that we were looking at our market perspective and looking at our market bias as a downtrend, we would take these go moves with a grain of salt. Right now, we are in a week. The weekly bar is telling us we're in a go trend. So maybe yesterday's trend continuation icon is something that we then get excited about and consider entering. But Absolutely. We have to remember that, because when the market is in a no-go trend on the larger time frame, this choppiness is much less of a concern if we keep that in context.
Absolutely. Very well said, Alex. Risk management is job 1, 2, and 3 for all of us traders. And I think that's the beauty of multiple time frame analysis, is using that to your advantage to think about whether you're looking at more of a mean reverting system or whether you're looking at a trend following system. All right, moving on from TPIC, let's look at NXT.
Next tracker, here's another one. Now this is even fresher because this is a new go on a daily chart. So
correct.
Again, maybe there's some room to run here to catch up with its peers that are already outperforming the subgroup. We've got quite a bit of space before we get to these prior highs. So a strong move yesterday. We're seeing enough follow through here today. We're staying relatively close to yesterday's close. Of course, it's the middle of the day on a Thursday, but we'll see what happens. But also encouraging is this break above zero on heavy volume. You can see the darker blue of the oscillator that came a couple of days ago, and now we're making new highs, and volumes on this momentum. Sorry, is on the side of this new trend.
It is amazing. 2 trend reversals coming out of GoNoGo squeeze conditions. So as we came to the top in March, we saw momentum really fall to neutral territory, getting stuck at the zero line, building several small squeezes before that max. And when it decisively breaks and retests below the zero line, taking off to the downside, that's a precursor to the trend change. The trend conditions are going to follow, momentum being the leading indicator. And then we're stuck in negative momentum territory throughout the no-go trend and begin to threaten at the zero line. First, a small break above, back below, retesting the zero line, and then finally breaking out of that squeeze on heavy volume to the upside. So the interplay between the indicators, between the trend following system and the momentum model, can be really powerful for guiding your trade decisions. Alex, the last segment, the last industry group of the information technology sector that we want to cover today is computer hardware. A couple of names to go through. Let's start with Next App, NTAP.
Yeah, I mean, just racing off. We look the gap higher. This gap then provided support. We struggled a little bit here, where that would have given us a reason to have concern about the go trend. But then again, same as you just said, as we build this squeeze, as the market is making up its mind, we break out of it, and then we're off to the races at new highs. So strong go colors for Next App, and we'll see what happens going forward.
I'm sure their industry relations team is going to call me afterwards. Net App, not Next App.
I think I said Next App as well.
Yeah, the
next. I was just looking at Tap and thinking we were talking about beer again, like we were, a couple of years ago.
I love, when consumer staples ruled all, right? Own what you know, as Peter Lynch told us. All right, moving right along. Western Digital, WDC.
Yeah, Western Digital really showing signs of trend continuation. I mean, I know that I talk about this a lot. I'd love to see clustering of continuation icons, because that, to me, it smacks of market participation, of gathering, of accumulation, right? So we've had this series of higher highs and higher lows. Really nice trend, you can see it stepping up. You can then get to this prior high, watch the weakness come in as we pull back. And then as we come back to zero and break out of a max squeeze, we don't race away right away, which is what we're looking for, but we continue to test and continue to find support. So when I see these clustering of trend continuation icons, especially as price tries to climb, and now we're getting trend continuation at prior highs, right? These trend continuations were further away. Now we're getting momentum remaining on the side of the go trend as we are trying to break these prior highs. So I love to see clustering of trend continuation icons on the right side of consolidation patterns. So I'd hope to see a new high coming up in the next few days.
And Alex, one more thing to point out that we love about having a clean chart, right? All of the indicators, all the technical studies that are so important to our work to build that mosaic and have a weight of the evidence approach, but having them calculated in the back end to give us a color-coded, simplified price chart. Look at all of the polarity principle on display here for us in this trend. Every high that was resistance becomes support at the next low. And you can, this is like a textbook example of seeing those areas of support and resistance play out over and over and over again. Easier to do when you don't have a lot of squiggly lines on your chart. And I think the good Edwards and McGee may be applauding from their graves that people can still appreciate this work that they did 100 years ago to give us a sense of behavior as it plays out in markets, and simply using areas of support and resistance, some basic price pattern analysis can give you a distinct advantage in seeing how this plays out.
Absolutely.
Last one of the day, Alex. Let's look at Dell Corporation, DELL.
Yeah. It's fun. I remember doing a study and doing my MBA, and it was on Dell computers, and it was a completely fundamental exercise, and right. Dell was really not doing well, and now we're doing much better. Mm-hmm. And I'll just analyze the price chart to get my information. Thank you very much.
All that fundamental data is reflected in the price.
It's all in there. It's all in there. So, and you can see this has been in a strong trend. It looks really good. It looks healthy. The oscillator has been predominantly finding support at the zero line. A few blips, but we had a runaway gap in the middle, which has been able to provide support and has seen us continue to make high highs. And we're at another high now on strong momentum with heavy volume. So looking solid for Dell at the moment.
Absolutely. And if we bounce this out to a weekly chart, we can see that this trend has been in place for some time now.
This is as straight line as you're going to get. That's basically a 45-degree angle. And the pullbacks or the weaknesses have really been sideways rather than destructive. So
correcting through time, not through price, right?
Yeah.
Absolutely. As always, Alex, it is a pleasure to analyze markets with you, to be here on this show. Thank you all for tuning in each week. If you have any questions about GoNoGo charts or the many different applications where we have implemented these tools, we're across scores of platforms now. Feel free to reach out to us, info@gonogocharts.com. And of course, subscribe, like, share, do all those things that the kids are doing on social media with this content. And until next week, take care of each other and trade them well.